A record-breaking $1 billion surged into Ethereum ETFs today, marking the largest single-day investment on record. This pivotal moment may signal a profound shift in institutional interest within the cryptocurrency market. Let's break down the implications of this monumental event. As we analyze the aftermath of today's remarkable inflows into Ethereum ETFs, the key question remains: was this a one-day spike or the beginning of a sustained institutional shift towards Ethereum? The cryptocurrency market has seen a surge in interest from institutional investors in recent years, driven by a growing acceptance of digital assets as a legitimate investment class. Ethereum, with its smart contract capabilities, has increasingly been recognized for its potential beyond just a digital currency, attracting attention from hedge funds and corporate treasuries alike. If the inflows continue, we could see Ethereum outperforming Bitcoin, potentially bolstering a broader bullish sentiment across the cryptocurrency landscape. Such a shift would indicate a significant change in how institutional players view Ethereum relative to Bitcoin, which has traditionally dominated the market. The implications of this could be profound, as it may signal a diversification of investment strategies among institutions. Conversely, if these inflows diminish quickly, today's event may be regarded as a mere liquidity burst rather than a structural market shift. Past trends have shown that initial excitement can sometimes lead to rapid corrections, and investors should remain cautious. Analysts will be closely monitoring ETF inflow trends in the coming days, as they will be crucial in determining the future trajectory of Ethereum and the entire crypto market. A sustained increase in institutional interest could lead to increased price stability and further mainstream adoption. On the flip side, a decline in inflows might temper enthusiasm and lead to increased volatility. As the market evolves, the next few weeks will be pivotal. Investors should prepare for potential fluctuations while keeping an eye on regulatory developments and technological advancements that could influence Ethereum's adoption and overall market position. The recent surge in Ethereum ETF inflows has captured the attention of the financial world, stemming largely from Bitcoin's remarkable rally to unprecedented highs. This surge in Bitcoin prices has not only rejuvenated investor interest in cryptocurrencies, but has also significantly boosted overall market sentiment. In the weeks leading up to this event, the cryptocurrency market experienced a noticeable rise in positive sentiment, as indicated by the increasing fear and greed index. This optimistic environment led to a substantial expansion of total market capitalization, signaling renewed confidence among investors. Historically, surges in Bitcoin pricing have often catalyzed increased interest in altcoins, and the current situation appears to be following this well-established pattern. Institutional investors are increasingly recognizing Ethereum's potential. Its robust smart contract capabilities and evolving ecosystem have made it a focal point for many institutional players seeking to capitalize on the burgeoning decentralized finance and non-fungible token markets. Additionally, the launch of Ethereum 2.0 has further enhanced its appeal by addressing scalability and energy efficiency concerns. The impact of this shift in investment strategy is profound. Increased inflows into Ethereum ETFs could lead to heightened liquidity and further price appreciation, creating a feedback loop that attracts even more investment. This trend may also signify a broader acceptance of cryptocurrencies within traditional financial markets, as more institutions look to diversify their portfolios beyond Bitcoin. The growing prominence of Ethereum could pave the way for increased regulatory scrutiny, prompting discussions among lawmakers and regulators about the future of digital assets. Looking ahead, if this momentum continues, we can anticipate a significant transformation in the cryptocurrency landscape. Ethereum's rise may not only solidify its status as a leading digital asset, but also inspire regulatory frameworks that foster innovation while protecting investors, shaping the future of finance itself. Today's record inflows into Ethereum exchange-traded funds, ETFs, mark a pivotal moment for the cryptocurrency landscape. Institutional investors are increasingly recognizing Ethereum's potential, as these unprecedented inflows signal strong demand. This surge not only reflects confidence in Ethereum's fundamental technology, but also highlights a shift in investment strategies among large players in the financial market. As institutions pour capital into Ethereum, the available supply in the spot market diminishes, which could exert upward pressure on prices. Historically, Bitcoin has dominated institutional interest, often overshadowing other cryptocurrencies. However, the recent surge in Ethereum ETF inflows suggests a growing acknowledgement of Ethereum's unique attributes, such as its smart contract functionality and burgeoning decentralized finance (DeFi) ecosystem. This shift in focus from Bitcoin to Ethereum could indicate that institutional investors are diversifying their portfolios, seeking to capitalize on Ethereum-specific gains rather than simply using cryptocurrencies as a proxy for Bitcoin. The implications of this trend are significant. As more capital flows into Ethereum, we may witness an altcoin rotation, where investors turn their attention to other assets within the Ethereum ecosystem. Projects like Chainlink and Uniswap, which are built on Ethereum, could benefit from increased interest and investment. This movement may catalyze a broader shift in investment strategies across the cryptocurrency market, encouraging a more balanced approach that includes a variety of altcoins rather than a predominant focus on Bitcoin. For the average investor, these dynamics suggest that the crypto market is evolving. New opportunities may arise as institutional interest drives innovation and investment into various sectors of the blockchain space. However, this evolution also carries risks, as the volatility associated with cryptocurrencies can lead to rapid price fluctuations. Looking ahead, the momentum generated by today's Ethereum ETF inflows could set the stage for a more robust and diversified cryptocurrency market. As institutional capital continues to flow into Ethereum and its ecosystem, investors should remain vigilant, adapting their strategies to leverage emerging opportunities while being mindful of the inherent risks. The next few months will be crucial in determining whether this trend solidifies Ethereum's position as a leading asset in the cryptocurrency landscape. On June 5, 2026, Ethereum ETFs experienced unprecedented inflows, attracting over $1 billion in fresh investments within a single day. This surge shattered the previous record for daily inflows, pushing total assets across Ethereum funds to exceed $10 billion for the first time. This remarkable uptick in investment reflects a significant shift in market sentiment and investor confidence in Ethereum's potential. Notably, Bitcoin, in the same market environment, briefly touched a staggering price of $122,800, indicating a strong risk appetite among investors. The overall cryptocurrency market has seen a resurgence, with cryptocurrencies like Solana and Dogecoin demonstrating significant percentage gains, further highlighting the growing enthusiasm in the sector. The backdrop for this surge is a broader acceptance of cryptocurrencies by institutional investors, who are increasingly diversifying their portfolios to include digital assets beyond Bitcoin. Ethereum, with its robust smart contract capabilities and a rapidly growing decentralized finance (DeFi) ecosystem, has become an attractive option. The Ethereum network's transition to a proof-of-stake consensus mechanism has also contributed to its appeal, addressing environmental concerns that have plagued cryptocurrency mining. This evolution positions Ethereum as a more sustainable investment compared to its predecessors. The impact of this inflow is profound, signifying a potential shift in the cryptocurrency investment landscape. The influx of institutional capital into Ethereum ETFs suggests that major players are recognizing the asset's utility and long-term growth potential. This could lead to increased volatility as more investors flock to Ethereum, but it also indicates a maturation of the market. As Ethereum continues to innovate and attract interest, it may challenge Bitcoin's dominance as the go-to cryptocurrency, reshaping investor strategies. Looking ahead, the outlook for Ethereum appears promising. The sustained interest from institutional investors may drive further innovation within the Ethereum ecosystem, encouraging more projects and applications to emerge. As regulatory frameworks evolve, the potential for Ethereum-based products to gain wider acceptance could lead to even larger inflows. Investors may increasingly view Ethereum not just as a speculative asset, but as a cornerstone of the future financial ecosystem. The coming months will be crucial as Ethereum navigates this pivotal moment in its development, potentially redefining the cryptocurrency market landscape. As we ponder the future of Ethereum's institutional interest, what are your predictions for the next steps in this evolving landscape? Share your thoughts in the comments and subscribe for daily deep dives into critical financial news.